All right. Bear me 1 second, guys. Let me just make sure. Right, let me know if you can hear me okay. Hopefully you can. All right, okay, people trickling in. Thank you for joining me. It's Saturday. It's not really great outside, so I thought I'd spend a little bit of time on a live session just to see what's going on. I'm sure that there may be questions as always, but I do like to do these things because it's a bit more interactive and I'm able to obviously answer questions and have conversations with you guys. There is a little something that I am planning to do a little bit differently on all of these live sessions, and that is if people are interested to actually come on live with me to actually ask questions, and we can have a conversation on my live stream. So we kind of make it more of a bit of a show and improve the interaction, in opposed to it just being via the text as well. So if that is something that people feel comfortable with, there will be a few bits, rules, I guess. Making sure that obviously you're on camera, making sure that obviously people can see you clearly. That's really, really important. You don't need to have, the lighting setup that I've got here, obviously, but clear audio, making sure you haven't got background noise will be really, really important. But yes, that's an idea that I do want to bring to the channel. I've been thinking about it for a while, but what it will do is it will allow us to have live conversations. Maybe not dedicate too much time to one individual person, because the idea of this will be able to get as many people on. You can ask any burning questions that you might have, and we can actually have an interaction, because I'm very, very conscious that sometimes when I answer questions from the Q&A like this, oftentimes there's information that goes missing. And obviously, when I'm answering the questions, context is really, really important. So that's something that I'm hoping to continue to do, something I do want to introduce into the show. And what I'm going to do is I will literally just try all this on this show. So if anybody does want to come on and just have a chat, I'm not sure that I can pin this. I'll just experiment with this very, very quickly. I'm going to pop in a link here where people will be able to join me. But let me just... Bear me 1 second. Let me just see if I can just get this right the first time round. All right. Okay, cool. So we've got that in there, but I don't think that... Can I pin this? Let's have a look. I can pin this. Okay, so it's now pinned in the chat section. So if anybody does have a question where they do just want to jump on and have a conversation with me one-on-one, that's absolutely fine as well. We can get that cracking. But anyway, how has everyone found the week? It's Saturday, and it's not been great where I am. It's not been great at all. And obviously, it means that we are heading into summer, and hopefully summer's going to be better. But I think back to this time last year, and I think we had really, really good weather at this point in time. But there we go. But anyway, guys, this is an opportunity to ask questions. So if you do have questions, make sure you put them in here. If you do want to join, the link is in there as well. So make sure that you drop in that link as well. I do want to have a conversation, a couple of things to get going. Obviously, this isn't my first live Q&A on the channel. I've done quite a few of these. It used to be fortnightly on a Sunday at 9:30. We've got one of those tomorrow, and the one tomorrow is a byproduct of a series of emails, WhatsApps, comments, DMs in Instagram, people asking me about pensions and what people who are maybe in their 40s, 50s, maybe a little bit older, what they should be doing if they realize that they are planning for retirement at a very, very late stage. This has taken some time for me to organize. So I think we did one last Sunday with Stephen from Marketplace Superheroes here on YouTube. He was speaking specifically about Amazon FBA. That took a few months to actually organize, between him giving me his schedule, what days he could do, what days I could do, and then obviously with everything else that's come out on the channel in preparation for that. So for the podcast and then for the YouTube video, a lot of time and preparation goes into that. A lot of time and preparation has gone into the YouTube live session that will be happening tomorrow, which will be about pensions. Again, I'm bringing a guest on. So he's going to be giving up an hour of his time on a Sunday evening to answer questions and for us to have a general conversation for people within that category who will benefit from the session. And again, it's all about making sure that we are able to get people in the position where they're making the best decisions possible, regardless of what their ages are. So again, so it's going to be for 40-year-olds, 50-year-olds who are planning for retirement, realize that maybe they're starting a little bit late and they want some real, practical, tangible tips on what they should be doing. So that's the live show tomorrow. It's taken a while for me to organize, but I'm really looking forward to it. It should be really, really great. So let's see what we've got in the chat. It goes without saying, guys, if I know that majority of my audience here on YouTube are between, the biggest swathe of the audience here on the YouTube are between the ages of 18 and 44. So if you are in your 20s or your 30s or so, and it doesn't necessarily apply to you, please do feel free to share it with your mom, your dad, your uncles, your aunts, your relatives, acquaintances that may find it useful, because it will be a great opportunity just to ask questions and get some tangible help with this kind of stuff. So let's see what we've got in the questions here. Bear me 1 second, guys. I'm just going to scan these. Golding, no, I don't. I live in the Midlands, actually. I live in the countryside up in Shropshire. I used to live in London. Many years ago. Obviously, I used to work in London and Canary Wharf and stuff. But now we've been up here for about 6 years now. Relocation and everything like that. So yeah, I'm up in the Midlands in Shropshire at this point in time. Right, this is a good one from Walter. Do you ever plan on releasing different courses in addition to your investment basics for beginners? Yes, I do. The second course is actually in development right now. And it is actually going to be talking specifically about how to pick stocks, like from start to finish. So what is the thought process? Where do you begin? And it's not just about fundamental analysis. Fundamental analysis forms part of it, but it's going to be from the top down. How do you go about picking stocks from sectors? What are the key considerations if you're looking at sectors? How do you filter down? How do you compare data? How do you analyze one stock to know that if there are two companies that are similar, so for example, Coca-Cola and Pepsi, very, very similar, they both produce drinks, right? What makes Coca-Cola better than Pepsi, and vice versa? So there will be another course. It's still in development right now. The investors course, the one that you're referencing there, which is the investing basics for beginners, that's a relatively low touch, easy to kind of get through course. I mean, you can get through it in 94 minutes. The new one will be very much more involved in terms of richness and context. So we're trying to keep it in an easily digestible sort of format. It will still be online that you can self-take yourself, and there'll be assessment tests in there, just like the first one that we've got already. But there will be a lot more analytical side to things. We're going to have a few tools in there as well. Calculations that will show. So there's going to be a lot that's going to go into it essentially, but there is another course coming. I don't want to give a release date because we want to make sure that it's as robust and as informative as possible, really. So yeah, it is coming. Cheers, Walter. Right. 1 second. We've got someone who's going to come on. I'll come to you in a moment, Manolis. Mark, actually, you're not far from me, my friend. You're not far from me at all. So let me know where you are in the comments. Yeah, because you're not far from me. Right. Let's get Manolis in here, actually. 1 second. Let me just bring you in, my friend. How you doing?
I'm very well. How are you?
I'm not bad. So I know that you... How are things since we last spoke?
Good, I guess.
Yeah? How's work and everything going on?
Well, yeah, work is going good. It's good. I'm going to the office now. I'm not working from home anymore. Yeah, I mean, still not able to do a lot of stuff, but at least I can meet with friends now. And yeah, waiting to get my first jab anytime soon.
Yeah, I see. I've had all of my jabs already, so it's kind of like, okay, it's nice to. I don't know about full protections and stuff, but I certainly feel a lot less nervous about going out and about now. Really, if I'm
Mm.
honest, so it's nice to have that little bit of protection now,
Yeah,
almost. So yeah,
yeah, that's a good thing.
cool. But do you have a question? Or any
Uh,
comments? Any thoughts?
Actually, two questions.
Hmm.
First, ARC ETFs.
Hmm.
What's a good way of accessing them from the UK? Because I've seen in free trades community, the official answer was that ARC ETFs are not compatible with UK law. So
Hmm.
free trade cannot offer them to
Hmm.
UK customers.
Hmm.
And when I tried accessing them from Stake, the message I got that is that for individual investors, you need to have at least 30K.
Hmm.
Is there any other way of accessing ARC ETFs for us in the UK?
Yes, there is. So the only place that I know of where you can actually access ARC ETFs right now is with Etoro. They've got all of them on there under their ETF panel. So one of the reasons why people like Stake, Free Trade, and some of the other guys cannot offer the ARC ETFs is because of a piece of legislation called MiFID. So
Mhm.
it basically means that they have to go through certain things to make sure that if they are making investment instruments like an ETF is available, they have to go through certain steps, which, to be fair, doesn't make any sense to a certain degree. But speaking to the guys at Stake, that's something that they're trying to get round at this point in time. But they have to go to the regulator for the regulator to agree. So yeah, but Etoro definitely has access to the ARC ETFs because I've been looking at the genomics one quite a
Mhm.
bit, and all of them are on there pretty much. So yeah.
Okay. So my next question is about sites that give you insights on certain companies and how their stocks are doing. I have found, well, I wouldn't say inconsistencies. I would say errors, especially when they give you competition.
Hmm.
So I was looking at a company that actually I proposed to you to use on your challenge,
Hmm.
ANSYS, and they listed as their competitor being Adobe, which is completely irrelevant as a
Hmm.
company. I mean, yes, they both do software. Yes, they're both tech, but they're not direct competitors.
Hmm.
So, do you have? I mean, I know that they're not direct competitors because I know what both companies do, but someone else that has no idea what ANSYS does or any other company similar to ANSYS would just look at that and take that face value. Do you have any, um, let's say, advice on people while they're doing research on companies that maybe they have not a good idea of what product or service they offer?
Yeah, I mean, who are you using?
I was looking at, I think I was looking at Guru Focus and Simply Wall Street,
Okay,
and
yeah,
both of them
yeah.
had similar types of, tiny bit of
Hmm.
mistakes,
Yeah.
like that.
There are a couple of things. So first, it all depends on how they're aggregating the information. So
Hmm.
a lot of them, for example, so let's just say Stake. Stake has got an analyst rating within the app, right? So
Yeah.
they will aggregate information from a number of different sources. And then they put that all together, then it's churned out in what you see in the visual side. So it depends on who they're actually correlating the information from, how many sources they're actually using, and how it's all filtered down. Then on the other side of actually, do they actually relate to each other? Cannabis is a prime example. So when I was doing research for some cannabis stocks that I bought at the beginning of the year, it's classed as pharmaceuticals, which you can argue it is, but it's not
Yeah,
really.
okay. It would be convenient if it was.
Yeah. Yeah. So I think a lot of the time what the analysts try to do is they try to categorize them into a sector or an industry, if that makes any sense. And then they just put it in with the closest that they can find if there isn't an individual specific sector for that company on its own. And therefore they get lumped in together.
Okay.
Because yeah, I looked at cannabis, I was like, pharmaceuticals? Okay, I can see it, but it's not really
Not
pharmaceuticals.
really,
And they
yeah.
put it in healthcare and stuff like that as well. No, it's not.
Yeah.
It's not the same thing at all.
Yeah.
But there you go. Cool. Anything else, Manolis?
No, that was it. The only thing I want to say is that you sold Autodesk and then it went up.
I know. You know what? And this is the thing. This is why I do not trade. It's like the attention
Yeah,
that it takes
fully.
to try and make sure that you get all the positions right and monitoring it on a consistent basis. Like I said it on the video yesterday. In the back of my mind, I'm like, I need to pay attention to this, but I've got so many things to do. And in the back of my mind, I'm like, I should go and have a look at this. And it's completely different to what I would normally do as a long-term investor. Just buy, right? I know it's a good company, leave it and just let
Yeah.
it do what it does. But yeah, I know stocks have been volatile. I mean, Jesus Christ! But there you go.
Okay,
Cool,
that
man.
was it. Let someone else get some of the
Indeed.
time. Yeah.
Cheers, man. I appreciate you coming on. If you do want to come on, I've pinned a link at the top of the chat. Feel free to hit that link and you'll be able to join me and ask a question live. I know that there are quite a few questions in here already. So bear with me 1 second whilst I try and actually just get round to them. All right. Let me just see where we were to start off with so I can actually catch up on where I was from before Manolis actually came in. Okay, right, here we go. So this is a good one. Do you need to report capital gains if I made £2,000 profit? HMRC website is very confusing. Good question. So the official HMRC rule is that you have to report all of your capital gains annually. So when you do your annual return, you've got to basically report any investment or anything like that, and then it gets offset against your actual allowance. So the official rule is that you have to declare them. If you've got any profits below your 12,300 capital gains allowance, then there will be no tax due. But if you have, then obviously you've got to pay the tax. So the official line is that you do have to declare it on a yearly basis. All right, let's see where we are. Let's have a look at this one. All my stocks are red, mostly high risk, including SPACs and tech. Do you think the markets will rotate back this year? Good question. I honestly don't know. I think the markets are always going to be volatile, right? And this is one of the things that we always talk about, but I think it gets underestimated, if that makes sense. So we talk about the fact that markets are going to go down. You're going to see your stocks in the red. Yeah, we know that, but I think it gets mentioned so much that people don't actually register it as something that will happen, especially when you've been through like a 12-month period where like things have just been green and everything's been growing and it's been fantastic, right? It's very, very easy to take that for granted. I think long term, stocks will rotate. Will it happen this year? I don't know. And that's the issue. There are so many other things going on right now that are impacting the markets. And as the world returns back to normal, it's going to be really, really difficult to judge what's going to happen with the likes of SPACs and tech. I think certain tech companies will do fine, but even over the last, sort of week and a half, you've seen Amazon take a big slide. Even after great numbers, you've seen Google do exactly the same after really good numbers. So I think they will rotate back as they always do, but will it happen this year? I don't know for sure. I think we'll see more volatility. I think we'll see prices obviously go up, but we can't ignore the fact that, even on equities, we are in a slight bubble. We are at a very, very high. I spoke about this in my members group, my Discord group this week, because we meet on a Sunday every week. And this is a couple of weeks ago, we mentioned this, that when you look at the various approaches to investing, active versus passive, I have a colleague who was talking about the fact that for many people moving forward, passive investing may not be the right approach for them. And the argument that he gave was that if you think about entry points into the stock market, a lot of people have gone into the stock market when the markets are at the high, because they are at all-time highs right now. And many people have been buying into the market on a regular basis at the high point. And the downside of a passive fund is Well, if you're passive, it's going to track the performance of that of said market. So if you bought in at a high and things are going to be volatile and things start to slide off, potentially you're just going to have your money just decrease in value. And his argument was that as an active management house, he felt that there was value in active management over and above passive management moving forward. Now, some people will be skeptical and say, well, you would say that because you're an active manager. But it does beg the question as to what is the state of play right now, where we are. Is the market at all time highs? Yes. Are we in a little bit of a bubble? Yes, you could argue it. Are we overdue a correction? Yes, you could argue that. So, with all of that being true, are you positioned from an investment point of view in the correct manner? Are you positioned to take advantage of whatever comes along? That's the big question. And even if it isn't, an argument to say you should convert directly into active management, because let's face it, it's going to cost you more money to do so. It does ask the question of, are you reviewing? Are you monitoring your investment strategy? Are you keeping abreast with it? Is now a time to maybe have a hybrid of both of those approaches across your investments? I don't know the answer to that for people individually. I really, really don't. But it does lead to a really interesting conversation about investment approaches and the markets as they currently sit in today's age. But I know that's I've gone off on a bit of a tangent there, but will they rotate back this year? I don't know. They will rotate back in the long term, absolutely. But will that happen this year? I couldn't tell you, mate. If we knew this, we would all be quintrillionaires because we'd all be able to time everything. Let's see. This is a good one. Do you have any kind of formula when it comes to selling funds/shares once a decent profit is made? I don't work specifically to a formula. If you are looking to invest and you're looking to take profits, I think it really, I personally don't believe it is down to a formula. There is no shame in taking profits. If you bought a stock and you've done really, really well, I mean, in hindsight, I could argue that I've had my Tesla stocks see $900. And technically, I should have just taken a little bit of profit, off the table at that point. I didn't. Now, Tesla is where it is today, way behind $900. So I think when you're looking at either taking profits, you have to do what you feel is comfortable for you. Don't rely on a formula. If you feel, actually, hang on a second, it's at a really, really big high right now, I feel like I should take profits, then you probably should. And Marky, you're actually not too far from me because I'm in TF4. So yeah, I think it's really, really important just to not necessarily rely on formula. Do what you feel is right for you, particularly because you're investing and you know why you're investing. You have your goals. If you can take money off the table, if you feel it's appropriate, absolutely do that. I think whenever you're investing money or you're looking at the markets in general, you have to try to do what you feel is right for you. And formulas can't tell you what that is. No, this is a good one. This is a big one as well. What do you do when your portfolio is down 50% full of tech stocks? I know it's good to diversify, but what if you only like and understand tech stocks? Mate, if your portfolio is down 50% right now, you've got to hold because look, it's down on paper, right? I say this all the time, but it is just down on paper. That's it. It's not a real loss until you cash it in. If you go and cash it in now, then you're going to crystallize that money and you are going to walk away with 50% less. So you need to hold tight, mate. Hopefully the tech companies that you hold, you've bought them because you believe in them. You said that you understand tech companies. So, I'd be interested to see. I mean, if we had a coaching session, I'd be asking you to send me your portfolio, because what I'd like to see is, right, what tech companies have you got in there? It's hard to diversify within a sector, but you can do it nonetheless. So how many companies do you actually hold? Tesla's a tech company, but it's also a car manufacturing company, but at the core, it's classed as tech. You got the likes of Facebook, for example, which is social media. You got Amazon, which could also be classed as a tech company. So, what kind of different tech companies do you have in there? Do you have some of the big foundational boys? I would assume that you do. But if you're down 50%, mate, I know it's hard, but just sit tight, hold your nerve. It will come back. It's just a question of when, and we don't know when it's going to come back. So, I know it's a difficult one, but yeah, we just got to we've got to be careful, and we've got to be mindful of it. If you do want to join the live stream, I have actually pinned the link to join me. So Monolith was with us earlier. If you do want to join, use that link to basically join. The only thing I will ask is obviously make sure that you've got a clear audio and I can see you as well. Those are the two conditions that I put to it. But let's see what else we can get to on these questions. Walter's just said on there, this is just to come back in terms of the course. Yeah, I mean, we're working on it at the moment. I know that it would be a popular topic because it's one of the big questions I always get. But with so much information out there, I want to make sure that it's succinct and we don't have any jargon in there. We have it so that it is properly informative. So you can actually take that and actually implement that into your strategy and stuff. But I think the first course is really, you've got to have foundation. So it's all about levels and trying to build. So yeah. All right, and let's have a look at this one. Are you in any altcoins? I've been holding ADA and Ripple for so long, and they just refuse to peak. I have crypto. I've got some Cardano. I've got some Ripple. I've got some XRP, I should say. What else have I got? I've got some Tezo. I've got Ethereum. Those are the four. I think those are the four coins that I've got at the moment. Some people will say that. Well, what is the peak? I guess is the question. What is a peak? Nobody knows what a peak is. What is the peak for Bitcoin? A peak is always based on hindsight, right? Bitcoin 50K peak. Okay. Ethereum 3,300 was the peak, like a week and a bit ago. I think if you're going to buy these coins and you're involved in these altcoins, you've got to recognize them for what they essentially are. They are speculative instruments that you can buy that could potentially return quite handsomely over a period of time, but they are extremely volatile. So you need to be careful, I would say, with them. Don't go and put all of your money in, but I do hold some of them just as part of my portfolio. But in comparison to my entire portfolio, I have a tiny amount, a tiny amount in them. I'm just scrolling through the questions, guys. Bear me 1 second. All right, let's have a look at this. What's your take on trading 212 pies? I'm a newbie to all this and definitely looking to take the course you have advised in order to have the basic knowledge needed before I invest. Yeah, so trading 212 pies, they're really, really good. So this is what I think about. So this is what I think as a beginner, a trading 212 pie will really, really help you. So on my course, I talk about asset classes and I talk about asset allocation, right? These are really, really important concepts that you absolutely need to understand if you're going to be invested in the stock market. All right. So with asset allocation, it's all about how you distribute your money across a number of either assets or stocks. And I'm separating assets and stocks. So assets or asset classes are equities, bonds, property, gold, commodities, right? Gold is a commodity, or you can have alternative things in there as well. So your asset allocation is how you actually distribute your money. So in other words, if you've got £100, do you want all of your £100 going into one stock, or do you want it to be spread across 10 stocks, and in what proportion? So do you want for example, a company that you really, really like, get in the majority of the £100, then the rest of it being divided across the rest of them. Asset allocation. So where I feel that trading 212 pies really works is because you can actually use the pie to help you build your own asset allocation. So you might have 15 or 20 stocks within there. And if you auto invest in the trading 212 pies, you're sending £50, £100 a month into it. It allows you to weight or distribute your money across those various stocks that you want to hold in the proportions that you choose. So that's where I think that trading 212 pies really, really help. And they're great as well because they can actually help you forecast for the future as well. So you can begin to kind of get an idea of what the portfolio might be worth in 10, 15 years' time, so on and so forth. I will take that with a little bit of pinch of salt because it is all about, because you don't really know what's going to happen or how the markets are going to perform moving forward. But they're really, really good as a tool for first time investors because it will help you build an asset allocation of your own. So yeah, and in the course, I talk about asset classes and asset allocation and what that might look like if you're a cautious investor, a balanced investor, or an adventurous investor. Though the distinction between those three is really important because many people believe that they are adventurous when actually they're balanced. I do a lot of coaching, so as part of what I do when I do coaching for people, where we talk about investing specifically, I take them through a risk profile, and 99% of people come out as balanced. And then we start talking about investment timeline theory. So, how long you're investing for, what your goals are. Or, again, there's a section about that in the course. So, timeline theory. How does the length of time that you're investing for interact with your risk and the risk that you should be taking when you're investing? So, all those things come into play. But, trading 212 pies are brilliant for first time investors. You can use that to guide your asset allocation quite nicely. Right, let's have a look at another question here. All right, this is from Daniel. Let's have a look at this. I started to subscribe to The Economist. Have you used this or similar news resources to try and get a balanced view on all the things going on in the world, particularly business news? I don't use The Economist specifically, but I do use the likes of CNBC, Yahoo Finance. I consume a lot of video content myself. And yeah, I've got subscriptions to maybe some of the industry ones as well, which give me inside information for financial advisors and the investment world specifically. The Economist is a good place to start, though. But if you are paying attention to that kind of information, that is good. The key thing is understanding what the language they use, what it actually means. That's sometimes the big challenge. But the more you read it, you'll start to understand it and it will become second nature in no time. It's a really, really good place to start. It's really, really rich in terms of the information and the breadth of information that you get from it as well. So yeah, it's a really, really good read, Daniel. Cheers. All right, bear me 1 second, guys. I just need to check something out really, really quickly because I did something a bit earlier on. Where is my... Bear me 1 second, guys. That was number 3. Okay, cool. That's fine. Right, let's have a look at another question on here. All right. Tesco's PE 2.8. What's not to like? More in general, do you use better future or lower valued EU, UK stocks versus USA, which is arguably overpriced and facing inflation worries? I don't. Let me just double check and see I've not missed anything else prior to this, Bob. 1 second, mate. Because it feels like that is a continuation of a conversation. Okay. I can't see that it is. All right. Okay. More in general, do you see a better future for lower valued EU/UK stocks versus USA, which is arguably overpriced and facing inflation? Okay. I think let me speak from my point of view because I don't want this to come across as advice and something that you should definitely go and do yourself. But this is how I look at it. So when I look at investing, I look at it from a global point of view. So if you look at the biggest market in the world is the United States, it's the US. That's where all the big tech giants are. That's where you have tangible track record. There is huge value in UK stocks though. But from my point of view, when I look at it as though, right, how can I get exposure to the biggest market and other markets around the world? And therefore, looking at EU, European, UK stocks forms part of that. Now, most of my money is invested in funds. So this work is done for me anyway in the global approach. So I trust that the likes of, Hargreaves Lansdown or Fidelity, for example, big investment houses, Legal in General, for example, know what they're doing when they're selecting European, UK, American emerging market stocks. And these companies, because I've worked in the industry and I've worked for discretionary fund manager before, they have floors and floors of people who research certain asset classes, bonds, property, equities. So I leave it down to them. My view generally is that if you can pick up things like recovery stocks, airlines right now, like IAG right now within your portfolio, they have huge upside for the future. Does that mean that you should go and put all of your money into those stocks specifically? I believe not, but I'm sure that many people will disagree and be like, actually, you know what? I'm going to plow in all of my money into those stocks because that's where they feel there is an opportunity for growth within their portfolio. And that's completely fine. You have to do what you feel is right for you. And if that is a level of risk that you're willing to take, then absolutely. Who am I to say, don't go and do that? I think with everything, you have to be clear on why you're buying or why you're investing in a certain area, particularly if you're buying individual stocks exclusively. You have to know why you're doing it. You have to know how that is going to, pay dividends to your goal, how it's going to take you closer to where you want to be. So I wouldn't necessarily put one over the other. I'll track back on that. I would definitely say I would want more exposure to the US because that's where the tech giants are, but I definitely would not overlook EU and UK stocks as part of my view because I recognize that COVID has been really, really difficult. And by and large, there is a lot of value and a lot of companies within the European Union or EU, the Europe and the UK that present a lot of opportunities for upside. Kirsten, thank you for this, by the way. Keep it going on flowing. Thank you. I do appreciate it. Thank you very, very much. Did I sell my Dogecoin? No, I still got my Dogecoin. It is up at the moment. I don't know. I haven't. You know what? I've not even looked at it. I have no idea. Is it at 70? Really? Is it at 70 right now? Mate, I've not paid attention to it at all. Let me go and have a look at it. Bear me 1 second. Because last time I checked, it was like 40. It was like 40 cents. Is it really at 70? Oh, it's at 66 right now. Wow. Okay. Very nice. Yeah, I've still got it. Very, very nice indeed. Exciting times, eh? Right, let me just get through these because there's a conversation about ETH and Cardano going on here, so I'm just going to skip past that. In the meantime, if you haven't already, please make sure that you smash the like button for the YouTube algo. There are 84 people on here right now. The likes are at 23. So let's see if we can actually get this up to... Yeah, let's try and get these likes up to 50. Please. There we go. We'll see the movement in it shortly. Let me just scram through these questions because there's a whole conversation going on at the moment around crypto and crypto. But I will be having a bit more content coming out on crypto specifically. I'm trying to get Tyrone to come on and actually speak about crypto and Ethereum specifically. He's very, very bullish on Bitcoin and Ethereum, just to give his views, but he's kind of like an expert. So He's very, very busy though. He heads up like 3 companies in the States. So yeah, he's a busy guy. So there'll be more coming on crypto. All right, here's a question from Dean. Hey Pete, how do you take profit on eToro? And if you do take profit, does it take it from your stake? Cheers, mate. I'm pretty sure that if you take profits in eToro, it actually cashes out the entire position, unless, because I tried to do that a couple of weeks ago for one of my holders, and it cashed out the entire position, unless I did something wrong. But I'm sure you must be able to sell down part of your position. But when I set it, I was in a rush at the time. I wasn't really paying attention. I thought I did it right, but it cashed out my entire position. So I know that you can take profits, you can set a limit, but I'm unsure of whether it closes the position entirely or not. It did for me, but I have a feeling that I did something wrong. So I don't know the answer to that 100%, but I know that you can take profits on eToro. Adrena, do you do coaching on opening a portfolio? Yes. So one of the things one of my most popular coaching sessions that I get that people book with me is essentially for, right, I've looked at Hargreaves Lansdown, I've looked at Vanguard, I've looked at eToro, I've looked at Free Trade. I don't really know which one to pick. What we then do is we go through your risk profile. So are you cautious, adventurous, balanced? And then we start to compare the providers. So is it Vanguard versus Free Trade? Bearing in mind they're 2 very different providers. They do different things, pros and cons. Then we can actually get into, for example, if you like Vanguard, we can have a look at all of the options in Vanguard and try to understand, okay, which one suits where you are on the risk profile, for example. So are you overextending? Are you not? We talk about investment timeline theory to see if you can move up the scale or whether you need to move down the scale. So I do that kind of stuff on one-on-one coaching. So we can talk about your portfolio selection, your provider selection, so on and so forth. And my job isn't to tell you which portfolio to have or exactly how to build your portfolio. Is giving you the information with context so that you are confident in building your portfolio, having understood all of the underlying principles. Because one thing I don't do in coaching is just go, right, do that, do this. If I do that, you don't learn anything. The idea of coaching is that we give you the tools so that you can make those decisions on your own without having to see someone like me, and you understand how things work. And naturally, what then tends to happen is you'll have questions that if you go and research, increases and improves your knowledge. So yeah, I do that on one-on-one coaching. Let's have a look at this one. Okay. I've used my ISA allowance up this year. Should I invest the rest in a GIA around 30K taxes? Yes, you should, because there is no other place for you to put the money. I mean, you could have a look at some risky stuff, but it depends on your risk profile. So, look, this is what would generally happen if I was advising and you were my client. Would max out your ISA allowance. Your additional money would go into a general investment account, and then what we would then do is we would then set up a transfer from the general investment account into your ISA at the beginning of the new tax year. So even though it sits within your general investment account, it will only sit in there until the start of the very next tax year. You'll then do a transfer, get that into a tax efficient environment. And we would do that on a year-to-year basis, rolling over that money from your general investment account into your ISA so it becomes tax-free. You will have to pay tax, obviously, if you have any gains over and above, obviously, your allowances. But, I said this to someone earlier when they booked a discovery call with me. Don't go into this thinking about what tax you don't want to pay. Like you're cutting off your nose to spite your face, essentially. Okay. Invest, get as much growth as you can. If you have to pay tax, you have to pay tax. But the underlying point is if you have to pay tax, actually, that shows that you've done really, really well. So don't think of it if you've used your ISA allowance, don't think about investing as in, I don't want to pay tax, so I'm not going to start investing. That's counterintuitive. So yeah. Manoj just said this. I've just searched. Okay, 1 second. You know what? Because they are there. They are there unless they've been removed. Give me 1 second. If I can share my screen, Manoj, I will do that and just show you where it essentially is. So where are they? Where are they? Where are they? ETFs, view all, and you should have the ARC ETFs in here. Let's do search in here. Yeah, they are here. Right, let me just pull this out. And what I'll do, bear me a second, guys, whilst I just do this so I can just show you where you need to go for this. Right, hopefully you can see this. So this is Etoro, and if you go ARC, you've got all of them right there, mate. So you've got the ARC K, ARC F, G, W, and Q. So you can literally just go trade them. But if I go, the genomics one is the G. You've got all the information there, and you can literally then trade and open the position from there. So yeah, that's how you access it, mate. They are all on there, and it's pretty much the only place that I can find for the ARC ETFs and stuff. So yeah, I know you wanted to buy the PRNT. Which one's the PRNT? I'm not sure what the PRNT is, but the ARC ones are all there. Maybe not. But the PRNT isn't an ARC one, though, I'm pretty sure. But all the ARC ETFs are pretty much there. All right. Okay, let's have a look. More conversations about cryptos. XRP is dead. Interested. Is there any point having Lifestyle Strategy 100 and VWRL in the same portfolio? The Lifestyle Strategy 100 is not the same as the VWRL because the Lifestyle Strategy funds are built differently. The Lifestyle Strategy funds will have a mixture of different ETFs in them. And therefore, what you'll find is that your exposure levels will be very different. So let me just go onto this really quickly just to see, and I can show you what I mean by this. Okay. So this right here, once it comes up, this right here is the Lifestyle Strategy 100 equity fund, right? So in here, you effectively have an index fund there. This one's a unit trust. This one's a developed world excluding UK. This is the S&P 500 emerging markets. That is not the same makeup as the VWRL. So they are not the same thing. You may overlap in exposure to certain areas, but they're not the same thing. The weightings will be completely different. So is it worthwhile having it in the same portfolio? It depends on what your intention was when you started out. Where did you want to gain exposure to? So on and so forth. But they're not the same thing at all. They're not the same thing. So you're going to get different exposure across to different markets in different ratios because of the way they're built out. And again, the Lifestyle Strategy Fund, these are invested in each of the ETFs. So again, if you go and have a look at this ETF specifically, you will find that actually the weighting, even though it's in the S&P 500, the weighting for individually for what's in that portfolio will be very, very different to what's in the WRL anyway. So they're not the same per se. Let's get rid of that. I'm going to keep that screen share open just in case there's any other further ones that we need to screen share on. Right, there's quite a lot of questions on here. 1 second. we'll see if I can get through them all. I'm just conscious of time, so bear me 1 second. All right, this is a good one. Are bonds worth having if you invest in 10 years plus? Surely 100% stock is better over the long term. When I see that question, I have questions back. So my questions back to that would be, why are you looking at bonds? And my question back to that would be, if you're looking at bonds, what kind of bonds are you looking at? Because there are different kinds of bonds. So, for example, in Vanguard, you can go and buy bonds in Vanguard. But if you're looking at investing over long term, so 10-year plus, then equities, yes, will probably return higher, will definitely return higher. Actually, historically, they have. And all the numbers tell us that equities outperform bonds significantly. So you can place a bet to say equities will perform better than bonds long term, 10 years plus. I think it's really important to understand what the role of a bond is, though. A bond is designed to be a diversifier to help you minimize your risk when you're investing. That's what a bond is designed to do. It's there as a counterbalance. It's an asset class to be used within your portfolio. And again, on my course, I cover asset classes and asset allocation. So how are asset classes, equities, bonds, property, commodity, cash, how are they used in a portfolio specifically to help you get the risk profile that you need? So if you are adventurous, do you need bonds in there? There's a huge debate whether you do or not. But if you are balanced like most people, okay, you do need some alternatives in there aside from equity. So if you do choose bonds, okay, how much of it do you need? So the bigger question is, what are you investing for? What kind of bonds are you looking at? And why are you looking at bonds? If you're looking at, and what is your risk appetite, really, to be fair? Yes, bonds are great as a counterbalance, but long term, 10 years plus, stocks, but maybe not 100% stocks, because at the end of the day, what is your risk profile? You got to remember, if you're all within stocks 100% and the stock market crashes, you have no counterbalance at all. So your risk level's really, really high. The idea of investing is stacking the odds in your favor so that you got more chance of making money than you do losing money. That's the most important thing to remember when you're investing. So, yeah. Any thoughts on the whole AMC situation? You know what? I didn't even realize that was still a thing, if I'm honest. I literally thought we'd come out of that whole cycle and it wasn't really a big thing. I've not really paid attention to any of the new things that might have come across or happened with it. So I don't have any thoughts, unfortunately, because I've not really been following it. Love Flower Petal, welcome. How you doing? Adrian. Okay, right, let's talk about this. I would like to ask you a question about the FIRE concept. How much percentage of salary I need to save/invest to reach FIRE ASAP? My goal is financial independence. Second part of my question is, to what should I invest in? Okay, I can't give you an answer to the second one because there are too many variables and I don't know your situation. So let's talk about the first bit. My goal is financial independence. You want to reach FIRE ASAP. Okay. So I don't know how old you are. I don't know what you do. I don't know how much money you earn. I don't know how much disposable income you have. I don't know what your risk profile is for investing. I think I'll give you my thoughts on FIRE and why I'm critical of it. And people will bite my head off because they'll say I'm being negative and I have no idea what I'm talking about. But I would argue that my 15 years in financial services, working with financial advisors, being a financial advisor, more than qualifies me to say what I'm about to say. FIRE as a concept is a very nice concept. It gets people motivated, it inspires people, and it definitely is something that most people will think is a great thing to guide their financial decisions. This is where fire completely goes wrong for me. And this is based on my experience. And people will tell me otherwise and be like, oh, no, they do talk about this. Well, not in my experience. They have it in my experience. They do not take into consideration the real issues that you face when you go on this journey of, I want to retire at 55 and you're 30. Okay. That gives you 25 years. Now, they can tell you that you need to think about disposable income and, making sure that your disposable income is as big as possible, then investing. This is what I'm being told now. In my experience, they never really spoke about investing. It was more about, making sure that you're reducing your outgoings as much as possible, then putting that aside. That's what my experience of it has been. But I'm happy to be told otherwise, right? So investing is one thing. However, there are some key practical financial planning issues that they do not address. Number one, if the world was utopia and everybody retired at age 55, they do not look at your life expectancy. So most people are going to live to age 80, 90 years old. So if you retire age 55, the question is, how much money do you need to basically get you to the point where you will have enough money to get you to age 90? Now, clearly within this, there is this whole idea of, well, retirement means different things to different people. So the first question is, on the retirement side, what does that mean? Does that mean completely giving up work? Because if it does, you're going to have an income issue. Because if you retire at 55 and you need to, you're going to die at age 85 and you live up to age 90, that's 35 years potentially of income you're going to need to generate from pots of money that you would have hopefully acquired in your journey to fire. So income longevity is a really key thing that ties very, very closely to life expectancy, how long you're going to live. Inflation is the next big thing that isn't really considered. And yes, investing can help you with this, but how you're going to invest and the strategies you're investing are really, really important to consider. My thoughts on this for you would be, depending on how much you actually earn and depending on how much you can afford on a monthly basis to go into a pension or into an investment, you need to sit down with your finances and allocate the most you can afford into it. And then you need to take a very, very careful view of how you're going to invest that money. What risk appetite are you going to, are you at? What is your investment strategy to help you get to a goal? Because if you're saying you want to be, financially independent straight away, you need to understand what that essentially means. You need to understand what monetary value that actually holds as well. If you don't know those two things, you can't get started. If you know what that essentially means, then it's all about making sure that, number one, you're able to put as much as you possibly can. And again, this will be different for different people, right? Some people, they can only afford to put 10%. Some people will only be 5%. Some people I know are streamlined enough to put 50% of their disposable income into investments, into savings, into whatever vehicles that they basically choose. You have to put in the amount that you can absolutely afford, bearing in mind that you still need to live here and now. Many people are happy to sacrifice and be like, oh, we're not going to do any of the luxury stuff. We're going to do that a bit later on. That's absolutely fine. I think you absolutely need to make sure you cover all of the bases. And when I say all of the bases, it's inflation, it's life expectancy, it's realistically forecasting and trying to project what you're going to need in income moving forward and what that monetary value that you're going to need. Getting it is one thing, getting it to grow and sustaining it is also another thing. So that's a very, very long-winded answer, Adrian, but I think some key things that are worthwhile bearing in mind. Adam, thanks, mate. Appreciate it. Well, let's have a look at your question. Are you not concerned at this stage in losing money in an overpriced market over the next 12 months? Me personally, no, because that's what markets do. Markets have done this since the beginning of time. So I'm not personally concerned about it. because I'm comfortable with how I've invested money. For anyone who's just starting out, then you should really, really make sure that you're comfortable with the level of risk that you're taking in the market. And I cannot overstate this. There is so much on social media, and it annoys me so much that there's so much content on social media just like hyping up how much money you can make. And at the moment, we're seeing this in crypto, which is why I will produce a little bit more content on crypto. But crypto at the minute is basically is like a field of landmines. If you're not careful, you're going to get done. I mean, to the point that you have scam artists knowing that this is a big thing right now, cloning my account to try and entice people to scam people out of money. Like, it is really, really, really important you keep your wits about you and you just don't fall for ridiculous claims. Like, it's really, really important. I cannot overstate that enough. I'm not worried about me losing money in an overpriced market. It's the way the markets are. I'm prepared for that. In the long term, the markets will always come good. But I'm very, very clear on what my investment goals are and what I'm trying to do here. And I think, for you to really be successful at this, you need to make sure that you're clear on those things as well. Right, let's have a look. I'm just going to scan these questions, guys. Bear me 1 second. Oh my God. Right, okay. I'm not going to answer that question. This is a good one. So let's have a look at this one. Is it worth investing if you're a student? Yes, 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 Casey. Casey. Yes, absolutely. If you're a student, absolutely you want to start investing. The key thing is not to overextend. Only invest the amounts that you can afford, first and foremost. And, spend some time just trying to get abreast with how this all works. Familiarize yourself with the language really, really early on, mate. It's one of the things that I wish that I knew when I was in my 20s or so. I really, really do wish that I knew what the stock market was and I had exposure to it. I just didn't. But yeah, get started as early as possible. Yes, you're going to learn things, but you'll gain more experience as you go along. And trust me, it's going to bear fruit in the future. Sorry, 1 second. I'm trying to like pre-qualify the questions before I pull them up. And this one's really, really funny. It feels like it's part of a conversation. And I'm not really sure whether this is a real comment or not. But bear me 1 second while I just kind of get a grasp of what this conversation's about. All right, let me just put this up. I think this is important, and I'm only putting this up because of the account on Instagram and the accounts that continually pretend to be me in the comment section of my videos. This is the kind of stuff that they are doing right now, particularly when it comes to crypto. They have all these great stories about how much they've invested and how they've 10x their money and 5x their money and how they can do that to you. If anyone is telling you this, you need to be thinking twice. You really, really do. Because at the end of the day, if they really did 10x their money and make that kind of money, right? You could be skeptical and say, well, hang on a second, then why do you need my money in the first place, right? That's just me being skeptical, right? And that's just me being critical. But I think this is really, really important. I don't know whether this is part of a wider conversation or not. But I do want to highlight this because the guys who cloned my account on Instagram, this is the stuff that they were saying to people. So luckily I had people who were messaging me, giving me updates as to the conversations they were having with this guy and the stuff that he was promising them. And this sounds very, very similar. And you're going to find that there are going to be so many of them right now because cryptos are blowing up who are going to be offering this kind of stuff. And I can't say more clearly, just be really, really careful and ask questions. Obviously, I'm not your mom. I'm not your dad. I'm not the controller of your money. You get to do what you want, but just be careful. Rob, looking forward to the live show tomorrow as I would like to retire at 60. Great. What advice would you give to someone who will get a DB pension to supplement between 60 and 75 when I get state pension? Oh, mate. Okay, so what would you give? Who will get a DB pension to supplement between 60. Okay, so I think what that means is you're going to have your defined benefit pension kick in at age 60, right? And then your state pension is going to kick in at 67. Okay, this is probably best left for tomorrow, Rob. But let me just give you just general views. So what you'll probably find is because your state pension, hopefully you qualify for the highest amount. So let's just assume it's about $9,000 roughly, 9,110. I think is the amount you're probably going to get. You're going to have that shortfall. So I think the most important thing for you is this. And I don't know how old you are at the moment. Yeah, I don't know how old you are at the moment, but things like forecasting your income is going to be really, really important for you, particularly if you're close to 60 at this point in time, mate. So really, really important for you to get an idea of what income are you going to need at age 60. Then you can start to calculate, right, what is the defined benefit pension that's going to kick in? What is that going to do? And then after that point, you can then start to model your income for when your state pension kicks in. So for you, it might look like income, huge amounts of income to start off with, high amounts of income to start with, up with, but then you'll start to staple off the minute your state pension comes in. Then, because your defined benefit is going to be guaranteed for life, inflation linked, you've got a really good deal, mate. I'm jealous. I really am jealous. But yeah, I think if you haven't already spoken to someone, you've not already started to think about modeling your income, start to think about what level of income you actually need. Hopefully at that point you've paid off your mortgage, so you have an idea roughly what your monthly expenditure is. It's just forecasting that and modeling that moving forward. But you should be fine. If you've got state pension kicking at age 67, depending on how much your DB is and how much income that's going to kick out, it's going to be how the land lies for that situation specifically. But yeah, hope that answers it. If it doesn't, mate, let me know. But yeah, Terry, who's coming on tomorrow, will be able to give you a really great answer for that. But it will probably be along the same lines of what I've just said there, but maybe a little bit more in depth because we'll have more time. Delight is saying her mate told her this. Yeah, be careful. That's what I would say. I would just be really, really careful. This is a question. I have no idea. I don't work for Trading 212. They've taken their time. I guess we just got to wait until further notice, to be honest. It's been a while now. They may not even take on new customers anymore because they have got their target amount of customers. Sometimes businesses do that. They say, our target for our customer base is this, and they won't accept any more clients after that. So we don't know what's going to happen with Trading 212. They are definitely taking their time though, but I couldn't answer that because I don't know. Oh my God. Okay, cool. Right. There's a lot of questions in here still. I'm not sure that I'm going to be able to get through all of these guys because we've been about an hour and I've got to clock off fairly shortly and run some errands. So let me just see if I can find some interesting ones. If I just scan these that I can answer really, really quickly. Let's answer this one from Tim. I'm wondering if I should prioritize my lifetime ISA, stocks and shares ISA, if I can only put 4,000 per year in. Good question. If you're looking to purchase a house, you want to buy a house, then you should definitely do a lifetime ISA. You can do a lifetime ISA and a stocks and shares ISA in the same year. So put your 4,000 into a lifetime ISA, anything over and above that into a stocks and shares ISA. Because if you do want to buy property, which I imagine you will do in the future, you're going to be thankful that you put £4,000 a year into your lifetime ISA. If you have anything extra, just put it into a stocks and shares. You'll be fine. I'm just scanning these guys. Bear with me just 1 second. Oh, I like this question from Jake. So I'm just going to answer this actually, because this is a really, really good question. Very, very good question indeed. All right. So actually, sorry, 1 second, Jake. That's not the right one. I just toggled off. Here we go. In your opinion, is it possible to become a financial advisor in London without a degree? I have read that employers often favor personality traits such as academic qualifications. That is true. However, I'm a qualified financial advisor and I didn't go to university. I don't have a degree. So do you absolutely need one? No, you absolutely don't. If you want to become a financial advisor, a degree doesn't get you to a financial advisor status. So you need to take very specific exams to become a financial advisor. If you take those exams and you were to say to a firm, I've taken my exams, I want to become a financial advisor, I would like to work for you. Trust me, there is a deficit in the number of new financial advisors coming through the industry. So the likelihood is that they'll snap your hand off and they will want you to work for them. I think the most important thing is, though, before you go and jump into taking the financial advisor qualifications, try and see if you can actually build some relationships with some either recruitment agencies or expert recruiters for the sector, or if you know anybody within financial advisory firms or anyone that works for St. James's Place, Open Work, True Potential, Simply Biz, Benchmark, any of those, then start having conversations first and then take the exam. You can go through academies now. Open Work and SJP have academies where they would put you through the qualifications and they will actually tee you up to go into a firm as a financial advisor, and they can actually fund you to set up your own business. So you do not need a degree. You definitely don't need a degree for that. Adam, like, listen, this is what I'm saying, right? I don't know about you. I'm not giving anybody money if they approach me online. I think the same thing applies. Like, if I don't know you, I'm not giving you cash. The same thing applies when you're looking at all of these crypto conversation and promises around crypto. It's like, you know, I'm not doing it. And the common sense really just does play a key part in this. So I'm exactly of the same persuasion as you are on that one, mate. I'm not giving any money to anybody on the internet if I don't know who they are. I like to do my due diligence, so I'm skeptical in nature when it comes to anything. So I always tend to ask questions and stuff. So yeah. McKnight, look, dude, consistency is the key. I mean, yeah, started investing at 30, trying to be consistent by investing 450 monthly, mate. That's great. Yeah, at the end of the mate, listen, that money over time, the consistency and compound interest will balloon and balloon and balloon and balloon. All you need to do is just have a look at things like, compound interest calculators just to see how much that could be worth. It's jaw dropping, mate. Like, seriously, it will make a massive, massive, massive difference. And oftentimes the hardest part is getting started. So all right, I'm just scanning the questions on here because there's still more, and I do have to get off. We've been on here for about an hour and 15 now, so I know that I've got to get off and do some bits and pieces. So, right, we're just going to leave it there, guys. I appreciate you joining. this live session on Saturday, a bit of an impromptu one. But like I say, I do want to do more of these, and I will on future ones pop the link. We'll do it as a trial first and foremost to see how many people actually join. We've had one today. But yeah, as I mentioned earlier, what I'd be looking for is just making sure that obviously we can clearly see you, make sure that you can be heard clearly. That's going to be important. What it will do is allow us to have an actual conversation where I can actually ask you some further questions in order to give you a contextual answer without it being advice. I can give you my thoughts on there. So we'll trial this moving forward. I will try to actually get it on a very specific day. So it will be scheduled. So it might be a Saturday afternoon. It might be a midweek Wednesday evening. I'm not sure just yet. I might need to test out those timings in random live sessions. But I do want to do that because I think I get a lot of questions, and because I'm stepping away from Instagram specifically after everything that happened, I get a lot of questions there, and I don't want to kind of like leave people stranded with no way to kind of like ask the questions that they want to ask and receive the answers from me. So maybe this is a good way to substitute. But we'll trial it. We'll see how it works. I will take questions in the comments as well at the same time, but we'll see how it happens. But like I said, for the live Q&A tomorrow, it is going to be for people who are in their 40s and in their 50s who are mindful that maybe they're starting retirement planning late, or they just have some very specific questions around pensions for their age group based on their journey. It has taken a lot of time to organize getting Terry to come on. He's sacrificing, an hour, probably an hour and a half of his time to come along on Sunday, tomorrow evening, to do this. And yeah, it's a sacrifice of time. He normally gets paid for when he speaks. So I would really appreciate everybody coming along and actually showing some support for the channel as well. And again, if it's not appropriate for you, but you've got mum, dad, uncle, aunts, or relatives that you think it might be applicable for, please make sure that you share that with them as well. But as always, I do appreciate you guys. Thank you so much for being here with me. Good number of likes as well. Appreciate that. So yeah, I will see you guys tomorrow evening at 9:30. And if you have any questions in the meantime, please do let me know. But let me just have a look at this quickly. 1 second. Something just came up here that just caught my attention. Oh, okay, cool. We'll leave that as it is. All right. Cheers, guys. Have a good evening.